If you're looking for a way to hedge against inflation and ensure your wealth keeps up with rising prices, Treasury inflation protected securities, or TIPS, might be an option you've come across. But how do you actually use them, and are they right for your financial situation? Well, in this video, I'm going to break down exactly how TIPS work, what makes them unique, and whether they're the best choice for you, or if you should be looking at other options to protect your wealth, like gold IRAs. By the end, you'll know whether TIPS make sense for your portfolio, or if you might want to consider something more tailored for your long-term security. Let's dive right in. TIPS are U.S. government bonds designed to protect you from inflation. The principal value of these bonds rises with inflation, measured by the Consumer Price Index, and the interest is paid based on that adjusted principal. Essentially, your investment grows in value as inflation increases, helping to preserve your purchasing power. This makes TIPS especially attractive if you're concerned about inflation eroding the value of your fixed income investments. The way TIPS work is pretty straightforward. When you purchase them, you're lending money to the U.S. government for a set period, usually 5, 10, or 30 years. The government guarantees that at the end of the bond's term, you'll receive your principal investment back, adjusted for inflation. In the meantime, you'll earn interest, which is paid semi-annually. Since the interest rate is fixed, but the principal adjusts with inflation, the interest payments also increase with inflation. TIPS are considered one of the safest investments you can make because they are backed by the U.S. government. However, there are some downsides to be aware of. For one, they're generally lower yielding than other bonds. This is due to their built-in protection against inflation. So, while you're not going to see huge returns like you might with other higher risk investments, TIPS can offer peace of mind that your investment is growing with inflation rather than losing ground. Now, if you're serious about protecting your wealth in the next 2 weeks, make sure to click the first link in the description. It's a free guide on why thousands of Americans are turning to gold IRAs to safeguard their retirement funds. Gold IRAs are a great alternative to TIPS if you want a way to preserve your wealth long term, especially if you have over 100Ks in your IRA or 401k or even $5 in savings. Gold tends to hold its value in times of economic instability and inflation, unlike bonds, which can be subject to fluctuations in interest rates. Back to TIPS. Another thing to consider is taxes. The interest payments from TIPS are subject to federal income tax, but they're exempt from state and local taxes, which can be a benefit depending on where you live. However, the inflation adjustments to the principal are also taxed as income in the year they're made, even though you won't actually receive the adjusted principal until the bond matures. This can create a bit of a tax headache, especially if you're in retirement and trying to manage your taxable income. So, who should consider TIPS? If you're looking for a low-risk, government-backed investment to hedge against inflation, TIPS could be a solid choice. But remember, if you're an American retiree looking for a way to diversify your wealth and protect it against inflation, a gold IRA might be a better long-term option, especially if you're looking to shield yourself from both inflation and the volatility of the stock market. Gold has historically been a great store of value over the long haul, while TIPS are more of a short to medium-term hedge. Now let's talk about how you can actually buy TIPS. They can be purchased directly from the U.S. Treasury through Treasury Direct Gov, or you can buy them through a broker in the secondary market. Buying them directly from the government is straightforward, and you can even choose to have your interest payments deposited directly into your bank account. But be aware that secondary market prices can fluctuate, so you may pay more or less than the face value depending on the current market conditions. If you're looking for more growth potential, TIPS may not be your best bet. Gold IRAs, on the other hand, have shown significant long-term returns, especially during periods of high inflation. So if you've got 100K or more in your IRA or 401k, or you've amassed over $5 million in savings, a gold IRA might give you a more dynamic way to grow and protect your wealth. Before I wrap up, one final thought. If you're serious about securing your retirement with an investment that can withstand inflation and market uncertainty, a gold IRA could be a far better option than TIPS. Click the link in the description to get a free guide on how gold IRAs are helping retirees just like you protect and grow their wealth. Thanks for watching, and I hope this gave you a clear understanding of how TIPS work and whether they might fit into your retirement strategy. If you have any questions, leave them in the comments below.